All right. If you are confused on the charts, it's not because, trading is random or stuff like that. It's probably only because you don't understand market structure yet, which is completely fine, super understandable, and to be expected if you're completely new. But that's why I kind of want to go over it and show you guys what even is market structure, how to identify it, why it's important, especially as a beginner. Because, like I said, trading is not random. The market moves a certain way. Market structure is basically how price is moving. And so it's not random at all. It's patterns, it's highs, it's lows. And so kind of understanding those patterns and knowing how to identify market structure is obviously super important because it's like, okay, well, how do I know if I'm buying or selling, right? Pretty much the most basic thing that you absolutely need to know. If you don't know this, you're not going to learn anything else, basically. So essentially, there are three different market structures pretty much that you need to know. And here they are. Basically, there is a bullish market structure, which is an uptrend where you're usually looking for buys. There is just consolidation as a whole, where market's kind of moving sideways. There's not really a clear structure of, if we're going up or down. And then there's bearish, which is a downtrend, which usually you would look for sells. Pretty simple. Now it's to really identify that on a chart, right? Like as you can see here, market's moving pretty sideways. And then in these other spots, as you see here, market's moving down, market's moving up, stuff like that. This is on a 5 minute, so obviously it's very quick. There's lots of changes. But let's say you would go on a 30-minute time frame. Again, you can see prices clearly moving sideways, but this right here is a very, very clear downtrend, right? Very, very bearish. These are things you need to know in order to know what type of trade you're taking, where market's likely to go, stuff like that. Obviously, there's a lot of other things that play into this and like market reversing and stuff like that. That'll come in later videos. For now, you literally just need to know what is market structure? How do I identify it? Now, as a complete beginner, there are certain ways, you should identify market. And first of all is to zoom out. A lot of people will go and they're zooming in on just like three, four, five, six candles. It's like, nah, bro, stop looking at tiny candles. You need to zoom out and mark out your highs, your lows, stuff like that. Don't overthink it. Don't zoom in trying to find different, structures and being like, oh, well, now we're buying. Yeah, if you zoom in like that, your bias is going to change, but it's to actually zoom out, take in the overall market, see what it's overall doing, and then make a decision on your bias, right? um you know you got to really look, are highs getting higher, are lows getting lower, is it staying the same, stuff like that, right? If you can't see a clear structure like I just showed you guys of the very clear downtrend, you're probably too zoomed in. It's probably looking funky. Reset, start over. Market structure is super important because it's basically telling you which side to be on, right? Like I was saying, it's identifying to you, are you buying, are you selling? This is super important. And a lot of people, especially in the beginning, lose because they're actually trading, against the structure, against the trend without actually realizing it because of mistakes like that, being too zoomed in or stuff like that. And market structure comes way before strategy. Like you shouldn't be hopping on a chart learning a strategy if you don't even know how to identify your bias and if you're buying or selling and stuff like that. You can have the best setup in the world, but if you're trading against the market structure, odds are it's not going to go very, very well. Obviously, again, super, super, super important. And a lot of mistakes too, as beginners, is like they're trading every move. They're, ignoring higher time frames. They're forcing trades in a range because, like I said, you're too zoomed in and it's like, okay, well, now it's going down, but it's like actually just the retracement. So, like, you're getting stopped out, stuff like that. Or just like thinking that market structure changes like every candle and stuff like that, which is not the case. Obviously, there's breakage structures, there's market structure shifts, stuff like that that we are going to get into. But I just really wanted to make sure y'all really understand. Like, you need to know your bias, look at higher time frames, see what the market is doing. Speaking of like the higher time frames and stuff, like that's a lot. Let's say we go on here, okay, for a higher time frame. Like, it's really really important, especially a lot of strategies, like if you're trading price action, which you are learning in PU in my community. It's very important that you're able to see, okay, as you see here on the 1 hour, we broke this high right here, or this higher low, whatever you want to call it. This was kind of sideways though, but let's say now, market's going upwards. Okay, on the 45, is it still upwards? Yes. Are we still doing higher highs, um, lower highs, stuff like that? Yes. Okay. You know, as you can see here, this would have been a break of structure, which could have led to a reversal, could have not. But again, we're going to get into those things later. But as you can see, we are still creating higher highs, higher lows somewhat for the most part, stuff like that. It's very important. You're not just looking at a 5 minute and being like, oh, well, what's market doing? Because as you know, like as you see here, you could have been looking at a 5 minute and being like, oh, okay, now we're in a downtrend. And it's like, no, you're not though. You're still in an uptrend. So very, very important to look at that on all time frames. Do they align? Are we breaking, highs? Are we sweeping liquidity? Are we doing whatever? These things are all going to come later. Anyways, that being said, market structure is your foundation. If you don't understand that, everything else is going to be confusing. Once you can see it, once market slows down, in your brain, once everything comes together and you can identify, what direction the market's going in, it's going to make it a lot easier. And then you can, hop into strategies and other stuff. But obviously, there's a lot to learn before. And especially breaks of structure, which actually is going to be the next video. So stay tuned for that. If this helped you understand, leave a like, leave a comment, let me know what you think, if this was helpful, if you guys have more questions. I don't want to make these videos too long. I don't want to go too much in depth. I wouldn't want to sit here and watch a 1 hour video on one certain subject. So I try to make these quick, simple, and still understandable, so people can come back and look and be like, okay, I don't have to skip through 30 minutes to get to the point, right? Anyways, we're going to talk about breaks of structure next video, so come back for that. Not sure when that'll be, probably a few days from now. But for now, that's all. As you all know, PU Prime code SkyTrades. Sign up, free education, free community. Funded Hero, also code SkyTrades, 65% off all funded accounts at the moment. Super, super clutch. Life hack: use your funded account to grow your live account on PU. More capital, more profit, etc. Anyways, I will catch you guys next week, and as always, happy trading.